We'll go ahead and get started. Welcome to the Investing in Resilience and Security panel for our Silicon Valley and U.S. government speaker series. I'm your moderator for today's session. We have three incredible panelists here today. So Dan Gwak, managing partner at Point72, also heads up their entire defense tech strategy, and he was also in the Marine Corps as well. Paul Kwan over here, managing director at General Catalyst. He leads the global resilience team for General Catalyst and was previously a famous investment banker at Morgan Stanley. Yeah. Hall of Fame is what I've heard. So, Steve Bowsher. Steve Bowsher, CEO and president of In-Q-Tel, strategic venture fund for the U.S. intelligence community. He's been a pillar of In-Q-Tel for nearly 2 decades now, right?
18 years and 4 weeks.
Yep. So lots of fun connection points here, one being In-Q-Tel. So I started my career with a couple of folks who helped get In-Q-Tel off the ground. Steve, of course, leads In-Q-Tel. Dan actually worked with Steve at In-Q-Tel for a number of years before joining Point72. Second connection point is just...
GC wouldn't exist without In-Q-Tel.
Yeah, and that's another connection point. We also have several shared investments as well. So Dan and I invest in a company that you might have heard of called Shield AI. I believe Dan and Paul co-invested in Vanavar Labs together. And then Steve, Paul, and I have invested in Anduril Industries. Lots of other co-investments, but that's a couple. And the third common connection is to the world's best university, Stanford University, of course. Except for Dan, because he went to some random school in Boston somewhere. So sorry about that,
this is
Dan.
The closest I get to Stanford.
But on a more serious note, all of us here today have supported founders, companies that are building products and technologies that are critical to national security and resilience. I think one thing that we've seen is technology has become increasingly important for economic growth, military power to a number of nation states, and countries are really competing to develop and control key technologies. We're in this sort of technology war that's being fought on multiple fronts, and being here in Silicon Valley, really at the heart of innovation, we're just seeing more and more investment dollars being poured into critical technologies like AI, autonomy, semiconductors, aerospace, advanced energy, and more. And maybe we could just start by discussing for the panelists, what are the sectors that you're most excited about right now, especially when we talk about resilience and security, and what's your investment thesis these days? Paul, do you want to give
Sure. So General Catalyst, 25-year venture capital firm. Our focus is global resilience, so that's defense and intel, industrial and energy. We think these are the most critical systems that haven't been modernized yet with technology and software. And then we take a slightly different approach towards portfolio allocation. So we think about the broad spectrum of things we have to build to kind of get to the mission. And so we think a lot about, because we do have a lot of capital, are we investing appropriately in big moonshots that could take a lot of time but be very significant in terms of outcome? So we have a fusion energy startup that we funded almost $1 billion into. We have a semiconductor moonshot that Steve and I have funded. Again, they might work, they might not, but if they do, they'll be transformative. Then you go through all the seed, Series A, Series B investing that all four of us do together. And then on the far right, we've actually done roll-ups, because we think that to do industrial, defense, and energy, sometimes you have to roll up companies and do typical, more creative approaches. And so we've got a company called Rebuild Manufacturing, which has rolled up about 13 advanced manufacturing sites in America into one conglomerate, and is making really good progress. And so I just encourage all of you to think about, if you want to solve these problems, it has to be much more creative than just the typical, hey, let's start a company and take some money. Sometimes you have to find someone out there and merge with it. Sometimes you have to partner with somebody. Sometimes you have to go after a moonshot. It's very, very different how you approach this market segment.
Yeah, happy to describe how we see it at Point72. We really are a U.S. defense tech focused strategy, and we think about our investing mandate as the startups today that can shift the global superpower balance. And that's a high bar, right? It's not a lot of companies that are necessarily going to be able to do that. But the reason we define it that way is because, first of all, I think we are at a unique moment in time where the technologies of today have that level of impact, right? If you rewind like 10 years, 15 years, I think there was a lot of emergent tech that had a huge impact on consumer and commerce and things like that. but probably weren't going to move the needle on the global superpower balance. Today, when I think about things like autonomy, for example, that absolutely can have a causal impact on whether the United States maintains its dominance. And so, that is the kind of big picture thesis that we invest behind. The second reason for that is, of course, as venture investors, we have to look at things that provide venture scale returns, right? You guys are all at Stanford. I think you're probably a little bit more advanced in thinking about this than some of the East Coast schools that Ernestine was referring to. But the reality is, it's not raising venture dollars and seeking an outcome is seeking an outcome that's $1 billion plus, inside of a reasonable time frame. That's a high bar, and that's not just about building a successful business. That's about building a successful, IPO scale business. And if you want to have that kind of impact, I think the bar needs to be that it really is something that can rise to the level of affecting the superpower balance of today.
So at In-Q-Tel, we're investing across 5 areas of technology. First one is enterprise technology, which we're thinking about renaming AI in some form or another, because everything we're doing in that space is AI. But obviously the agencies we work with collect large amounts of data, so we need technology to search it, store it, integrate it, present it, visualize it. So we're investing across all those areas. The second is cyber, which technically you could argue is enterprise technology, but we've broken it out as a standalone practice area for us. The third is advanced systems. So think of these as anything from the commercial space platforms that a number of us are investing in, to airborne platforms, to unmanned autonomous platforms in the air, on the ground, in the sea, underwater. The fourth area is intelligent connectivity, which would include covert communications. It would include our microelectronics stuff, including the deal that Paul referenced there, but a lot of our hardware and microelectronics and telecom or communications stuff would fall in that. Then our fifth area is probably a little bit of a surprise. It's actually called B-Next, or Biology Next. That's because we're interested in biodefense, we're interested in biosensors, and as engineered biology becomes a more interesting technology areas, we're interested in some of the manufacturing and other things you can do with engineered biology.
Has anything changed in terms of how each of you have thought about NatSec and defense tech investing over the past year, especially as we've seen recent conflicts emerge across the world?
So I'll go first on that one. I think a couple of things have changed. First is, I'd say that the vast majority of the 18 years I've been at In-Q-Tel, we invested in what we would characterize as dual-use technologies, so technologies that were being developed for both the government world and the commercial world. Companies like Databricks, FireEye, Cloudera, things of that nature would be representative investments for us. In the recent 4 or 5 years, maybe going back longer than just 1 year, we've seen the rise of a defense tech ecosystem here in the United States, in which we're seeing more and more companies for whom the only customer market that they want to serve is the government market in some form or another. So, in the first 10 or 12 years I was at In-Q-Tel, Palantir would be the only example of a government-only company that we invested in. Now, starting back in 2016-17, you saw sort of the second generation of those companies, led by Anduril, but also Shield AI, Skydio, Vannevar Labs, a number of other companies were sort of founded in the last 5 or 7 years that are really focusing only on the government as a market. So that's certainly been one, I think, meta change here. The second I would say is in the conflicts in Ukraine and in the Middle East, what we've obviously seen is the rise of drones, counter drones, electronic warfare, new forms of covert communication, new forms of aerial collection, new forms of autonomous platforms being deployed, new forms of munitions. So, I think all those areas I just described, some of them we were investing in before any of those conflicts started, but they've certainly become more intense areas of investment since those conflicts have started. And other areas, quite frankly, we weren't investing in at all. And then as you turn towards a potential conflict in the South China Sea as perhaps the next conflict on the horizon, I think you see some of those same technologies I just described certainly be applicable there. But what you also see there is a much increased level of interest in maritime-related technologies, whether it's on the surface or underwater. But certainly there's going to be a lot of demand for technologies that can operate in those environments.
I think there's like a lot of hype around defense tech, industrial tech. There's like a conference somewhere in the U.S. every week. You can get like a free lunch somewhere. I think there's 3 conferences on Wednesday, just this week, and it's exciting. It's awesome to have talent and energy and focus and capital. But I think there's really, 3 things that have changed my mind, Ernestine, in the last year. One is, if you actually talk to people that have been like at the edge in Ukraine, people who've been there for weeks. And talk to some of the foreign advisors, the pace of change in Ukraine is insane. So, I had the chance to meet a very senior Western military leader, and he said, listen, I've been gone for a week, came out to Washington to brief some of your friends, and when I go back after 1 week, everything will have changed. I will not know anything about tactics and stuff, and it's just that fast. You have to understand that's how fast it is. And their fear is that all of that operational learning is going back via the Russians to the Chinese and others. And so that's like just to understand the speed, the velocity of learning and how all these things move on these digitally connected battlefields, all the drones, all the radar, all the EW, it's very, very intense. The second thing is when you actually dig into it, it's a multidimensional battlefield, and there's opportunity for everyone to contribute in some way. And this is something we talked about last class, which is, yes, there's the land, sea, air, there's the cyber warfare, there's the space warfare, but there's also economic warfare. There's informational warfare. And so you think about and then there's the industrial base to build all those capabilities. And so when we think about what do we need to do to innovate and modernize and work, can people either contribute from a startup standpoint or from an energy standpoint, it's on all of those dimensions. Energy, right? All of these things feed into this stack around much more resilient capabilities, global resilience for each of us and our allies. And so the aperture for what we have to do is much bigger than just, say, drones and AI planes. And the third piece is, even though we have capital now, we have experienced investors who've served and understand the marketplace and have all that, and people coming in the energy space, sales and distribution into the government is really, really hard. There's probably 25 people that have sold $1 billion of stuff into the U.S. into the DoD. And so getting the right help to sell into this environment is very, very challenging. And so we were able to start a new kind of defense company just 2 weeks ago, which is called Valley, where we put a world-class go-to-market team, the head of sales from Palantir, head of federal, and she's the CEO, and her team will help you sell into the U.S. government. And so that's someone you would never get to hire unless you were a big, big company, and she's gonna start a whole platform to help. So again, selling is not to be trivialized in this market, especially for those who have experience, but if we can take out some of those friction points, then we can start to unlock the innovation.
Yeah, in the last 12 months, I'd point to 2 things. One is a market innovation that I would call probably boring but important, and then the other one's a doctrine innovation that I'd probably call scary and also important. On the market side, it's kind of like Paul was saying, in order for a company to reach a big outcome in terms of big, revenue selling into defense, they have to land what's called a program of record, right? In the U.S., the way that we spend money as a nation is that Congress approves the spending, that kind of determines the market size, and then companies have to, get a piece of that. That muscle among startups has traditionally been very underdeveloped. And the reason for that is because typically the 6 or so prime defense contractors in the US, they cover every possible program office. If a program manager somewhere even has a daydream, there's somebody from a prime writing that down on a napkin and putting stuff in front of that program manager. You can't run go-to-market that way as a startup. You cannot cover every program office, right? And so there has to be a new playbook around how do you start with an unfair advantage you have in technology that the primes cannot compete in, and then generate that market and that demand in the form of a program of record. And I would say in the last 12 months, it feels like, when you see the program awards that are going out and the talent that we talk to on the go-to-market side, there's finally like a strong base of, of operators that have come up through that playbook and can repeat it. And that's absolutely necessary in order to get these products into the right hands.
It's a great, the reason why it's so hard is because it's a three-headed sales process. The user, the person signing off, and the person funding it, they're three different people. It's the only industry in the world where it's convinced three people to buy a product.
And they don't talk to each other.
Nor care.
They don't even know that each other exists, right?
They really don't.
It's a pretty wild system, but that is the system. And I think the startups are finally starting to figure out the playbook around that. And I wouldn't say that knowledge is common yet, but at least it is emergent. On the scary and also important side, I would say doctrine is massively changing with respect to ground warfare because of the use of drones. I think a lot of people do understand that that is a big product and technology opportunity, but it's also a doctrinal change that I would say the United States hasn't made yet, right? As a former infantryman, I think about the videos that we see coming out of Ukraine and the intelligence that's coming out of the Ukraine. If we ran our patrols the way that we did in Afghanistan, like every one of those patrols would be a mass casualty event, right? And that's not going to be a war-winning motion for us. Part of that solution has to be technology, but I think part of it also has to be changes in doctrine and how we fight. And I think we're at a very interesting point where we're still making that transition.
Yeah, so the Western general I got to meet said, this is gonna either scare you or make you happy. So it's a 7-minute kill chain in Ukraine. So you leave your hiding spot, within 2 minutes, you get classified by a drone somewhere as a threat or an enemy, or friend or foe. And then 5 minutes, something's coming at you. So you have 7 minutes to do what you need to do and then duck back in. And then you've got to learn how to dig trenches again, and you got to learn how to look up.
Yeah.
I didn't realize, you guys are all going this way, you got to look up now. So they had to train their teams to look up all the time, not normally around.
So I want to come back to a couple of points made here. So first of all, Paul's first point about the speed of iteration that's going on in the battlefield right now, that cannot be overstated. It is happening. And what I think the US military, nor the Chinese military, nor the Russian military have really absorbed yet is because it's happening that fast, decision-making is going to have to move to the edge. You cannot have a command and control structure because things happen too quickly for that, change too quickly for that information thread to move from the field up to central command, say Pentagon, and back down again. And so I actually think that's an advantage for the US because as command and control as the US DoD may feel like, it is actually a much more distributed organization than either China or Russian military. So I think it's going to be an advantage for the United States here. But decision making is moving to the edge, just like it is in all of our AI architectures, but it's going to move to the edge in the military. The second thing I would say about Dan's point is it still puzzles me that what seems obvious to all of us who spend time talking to folks in Ukraine and in the Middle East about this change in the nature of the warfare still hasn't permeated the sort of command and control architecture of the United States DoD yet. And when you talk to them about so how much time are the cadets at West Point and the midshipmen at the Naval Academy spending using drones? You get well, maybe there's one day a year where they get to play in a field somewhere. When you go down to Quantico and they're training the next generation of Marines, and you sort of say, well, what are you doing with drones in training? We can't use drones in training because they interfere with helicopters. It's not safe. I'm like, well, you think it's going to be safe out in the field if they don't know what to do with drones? So as obvious as it seems to us, it's not been internalized in the US DoD yet in ways that I think is very dangerous for our soldiers.
Mm-hmm. So everyone's, of course, talking about AI these days, even outside of defense tech. How are you seeing AI proliferate across DoD and government, maybe some specific examples of companies you're working with?
I think this is an area where, the AI hype has permeated so many industries that even in a place that's fairly resistant to technology like DoD, I'm starting to see the green shoots, and so I think this is kind of a hopeful question. Mm-hmm. It's in the areas that seem obvious, like autonomy, we're starting to see it, right? Certainly companies like Shield AI are starting to get, real traction with DoD. But it's also in areas where, you wouldn't necessarily immediately think of, but there can be really good effect. A good example of that is in things like mission planning and using large language models to do things like debriefs and after action reports and things like that. That's all intelligence that's gathered from the field, and it's earned a very expensive way, right? And oftentimes, just because of the nature of the military and how often those roles change, the sad thing is we go out and fight like it's the first time many times, right? Whereas, I think if we can be a much better force at, absorbing intelligence and recalling that intelligence in exactly the right time, right place, it can make us much more effective and honor that intelligence gathering in a way that can make a difference. And so those are some ways that I'm seeing it anyway that I think are pretty promising.
I think we're seeing it across all parts of the military complex, just like it is doing for all other industry sectors. So whether it's writing RFPs to bid on contracts using AI, and so you hit a button and you get an 85-page proposal pretty much done. Like these things are like these beasts of a document. That's cool, or logistics or operational stuff. I think what we're focused on is how can you get said capability into use faster. And that's where we like to point to this company called Helsing in Europe, which partly out of necessity and partly because of approach has been able to bring modern software technology into assets very, very quickly. This company, I think 2 years and 2 months from the founding, won a program of record, the program of record that Dan's talking about. The previous record was Anderl, 3 years to win a program of record, which means you have a budgeted line item in your government. So Helsing got a German program of record in 2 years and 2 months to put modern electronic warfare software on the Eurofighter, their marquee fighter jet. And that's really, really cool. And they've since replicated that playbook by partnering with the primes, building great software, hiring great AI people from Meta that didn't know anything about government or military, and going after these missions, partly because they have to, because they probably are the most advanced European defense AI company. So there are these really exciting examples, Ernestine, of people bringing AI into the military quickly, getting capability up and running very efficiently, that are really beacons for us to follow and learn from.
So I think the first area that AI really penetrated the defense and intelligence community was in image recognition. So the U.S. government collects a ton of satellite imagery or aerial-based imagery, and didn't have enough humans to look at it to figure out what was in it or not. So a lot of stuff that they collected just didn't get looked at. And they started to use computer vision 4, 5, 6, 7 years ago, I'm not sure exactly when, to do that initial triage, if you will, of what's interesting, what's not interesting, and then what is interesting they would then send over to the human analysts to figure it out. And it had an incredibly large impact. The numbers I've seen in terms of the amount of increased image process, the amount of the shortness of time from image capture to image being analyzed by a human when important, all those metrics were just phenomenal. It's penetrated into some of the other areas. Certainly a lot of the big data stuff is leveraged AI now for a couple of years in a lot of ways that Fortune 500s are using AI to do it. I think one of the hot new areas right now from the generative AI perspective is code assistance. So these agencies have a lot of developers and they're trying to make them more efficient, just like the whole programming industry is using through that. So I think all those things are great. If there's one area I'd point to that still hasn't quite come to fruition, despite some of the hype around, I'd say is autonomy. The autonomous software that's out there, I think, isn't as mature as we would all hoped it would have been by now. And so I think that's a really interesting opportunity for people to continue make progress.
Mm-hmm. Yeah, it's not fully autonomous. There's still
No.
a 99% problem.
Yeah.
Maybe you could talk a little bit more about how you think about evaluating and diligencing defense tech startups to invest in. We touched upon selling into government is very hard, for instance. How do you think about a company's ability to sell into government, and also specifically for software versus hardware startups?
In the earliest stages, which is where we invest, it's all about the founders. And what we're looking for in terms of founder DNA for a defense tech company is primarily one, you know, a founding team that has deep user empathy. And that usually means that one of the founders has, you know, been in the military or been in direct support of someone in the military. You know, somebody who's kind of been there, right? Because I think it's very hard to imagine. It's such a different world. It's hard to imagine the product that will really click and work in that workflow and understand the challenges and so forth without, you know, some amount of direct exposure to what that world looks like. And so that's one thing we look for. Second thing we look for is that go-to-market experience. That's very, very different for DoD. Selling into the government, it's a very different sales motion than somebody who's, you know, built a big software sales team, for example, that sells commercially. And so, you know, I think there's a lot of learning going on still. So we don't expect somebody to like show up with the whole playbook, but it can't be the first time they've heard of a program of record, let me put it that way, right? So we certainly look for that as a second piece. And then the third piece, of course, not in order of importance, is real technologists, right? You know, when we are betting on a team with venture dollars to have a massive outcome, there has to be something that they can do that the defense primes cannot do, and that is often technology. If the primes can do what the startup is trying to do, this is an industry that has massive advantages to incumbency, and so, you know, we don't like that shape of bet. We look for founding teams that have that hardcore technologists that can do something that very few people on the planet can do.
So if you look at Anduril and Helsing, each of them have 3 co-founders of the exact profile that Dan just outlined. And so yes, in a perfect world, if everyone had those 3 things, technology CEO background, go-to-market DoD or German defense, and someone who knew AI and the use case, amazing. But like, that's gonna be a very rare set. We see right now, and I don't think this is the right answer, we see a lot of focus on pedigree right now in the marketplace. So I worked at Anduril, I've been there 3 years, I'm coming out. You can get a seed round done really quickly, grab your friend from SpaceX down in El Segundo, we're gonna build some hardware. And so there's a lot of, you know, I joke about this, like there's a lot of pedigree around that, which if you look at the history of venture capital, where somebody worked is not really a determinant of the outcome because it's just not. Right? But there's a lot of pedigree bias right now, good or bad, because they do know a lot, they have the right experience, and they can jump a lot of steps. The hardest thing to figure out is who are the people that have traveled the furthest in their journey to get to this point, to start a company, and who can journey the furthest in terms of aptitude of learning and intensity of that learning, manifesting team, capital, and product efficiently. And that is the hardest part about venture, I think, and because those people are very rare, and they may come from nowhere you expect, and that's sort of like. But so I want to make sure people understand, like, there's the thing that Dan and I want to see. Ideally, three people walk in, yes, that's amazing, or there's that person from SpaceX, Tesla, Anduril, Palantir, but then there's this other journey type, that person that's just done so much work, the person that Steve and I funded in semiconductors. Never worked in semiconductors. The journey this person traveled to learn that space was insane. And the way this person's hired this team of specialists from that industry is insane. That is the archetype. It's not for everyone. But I think if you remember those 3, you'll have a sense for where you want to be and what you can do.
Yeah, I don't have a lot to add to what Dan and Paul just said. I guess the one thing they didn't mention is I actually think in this area, you also have to diligence your co-investors. As well, because as this space has become hot, I think there are a lot of tourists coming in who want to invest in defense tech space who don't really understand how to build a defense tech company. They want to build in the same way that you build a commercial tech company. And I think that's different. In the commercial tech world, typically VCs want to fund them for 18 to 24 months, see some progress, you know, raise the next round of funding. In defense tech world, it's hard to get meaningful progress in 18 to 24 months at the early stage. And I think a lot of companies are getting funded that way and are coming up now for their Series A, Series B investments, and they don't have a lot to show of what they do. And so I think you have to fund the defense tech companies in larger chunks of time than you do with commercial tech companies. I'm not sure every investor realizes that. So I think that's something else we pay attention to.
Maybe on that note, especially for some of these later stage companies, how do you think about valuations? It feels like there's a lot of defense tech companies that are getting valued at more public tech company comps as opposed to public defense prime comps, and just how do you think about valuations in general?
So Palantir hit its all-time high. It's like 97 billion. It's 27 times next year's revenues, which is twice as high as any other software company in the world. So clearly there's some AI hype there, but there's for sure a company that went from being kind of a laggard in terms of valuation multiple at time of direct listing and the defense risk and all the other crap around it to now having the highest valuation multiple. Kind of tells you where things can go. And so we're pretty excited about that change in the market space. I think one giant misnomer is around hardware. In general, public market investors like software more than hardware. Software is high margin, it's recurring, it's easy to model, it's really simple, you have a lot of comps. Hardware is less so, and I think you'll see that shift in the next couple years where people pay a premium for software-defined hardware companies. Companies that make hardware that are powered by software. It might be lower gross margins today, like an Anduril or a Shield AI, but as they scale and the margins scale up, it'll actually be, frankly, even more valuable. And I've written about that on LinkedIn, and I think a lot of people misunderstand the value of Anduril. They think they make hardware, how can they be valued at their last round? And I could clearly articulate to you why, on an intrinsic value basis, it should be worth what it is. It just takes a few more steps that you just have to understand that that business model shift. I mean, selling hardware products into the government has a higher lifetime value than selling software. They're going to buy this stuff for 15, 20 years. It also doesn't cost you 100 software engineers to build it. So you think about that calculus, and you sell it once and can scale it. So there's a lot of really cool things about software-defined hardware if you can pull that off. Obviously, Tesla and SpaceX are probably the two biggest examples to look for.
So Paul, your comments remind me of, Dan, maybe you could speak to this in terms of what Shield AI has done in terms of started with software, acquired Martin UAV, packaged their software around that. Kind of just thoughts on that and that as a general strategy for startup.
Absolutely. I think it actually goes to something Paul said earlier as well, which is that in defense tech land, you have to think a little bit more creatively, right? Yes, in an ideal world, you just compound revenue the same way that a recurring software business does, and you go out with like 90% gross margins and you're doubling. Like, great. I think in defense land, a lot of factors kind of change the key inputs, right? One is the outsized value of companies that own programs of records, right? Because they're so sticky, right? So sometimes it makes sense to acquire your way in and then kind of upsell, if you will, the better product that you've got. And that's kind of what you're referring to with what Shield AI did, right? They started as a company. At the heart of it, they're a autonomy company that builds the software to control the hardware and make it autonomous. But you can't really sell autonomy software to the government, right? It's not like the government's like, oh, I've got all these things that are just waiting for the software, and please, will someone sell me the software. That's not how they think, right? They buy platforms, and those platforms are autonomous or they're not. And so, one thing that Shield AI did, a little bit differently was they went out and bought a Group 3 UAV manufacturer called Martin UAV. And they ported their software onto that product, and it became the only autonomous Group 3 UAV in the market, which really kind of had a strong sales synergy, right? It's hard to imagine anyone buying a Group 3 UAV who's like, okay, but I don't want the autonomy. Like, give me the one that has no autonomy. Not many people are going to say that, right? And so just that alone was a big success story for Shield AI. But I think that goes back to your question of, hey, how are these companies going to be valued in terms of valuation multiple as like a defense prime, which trades at a very low valuation multiple, or like a tech company. And I think if you do the principal component analysis on that, really, it's actually from a finance perspective, two very unromantic things that are the principal determinant of a company's valuation multiple, which is revenue growth and gross margins, right? Like if you really just kind of run the regression against those two things, they are the principal determinant of whether a company trades at a rich multiple or at a cheap multiple. And so it's no surprise that the typical defense prime that's growing like 1% a year and it's got 11% margins or whatever is going to trade very poorly, and the tech company that's going out doubling every year, 90% gross margins.
It's actually the increase in gross margin, just to be very clear. It's not that you want to go to steady state. If your gross margins can go up a lot, then you have that premium valuation, as opposed to if you had 99% gross margins and went down to 90, it'd actually be different. So just make that point clear.
Yeah. And so, in a move like that, right, there's a natural arbitrage, right? Shield AI acquires a company like Martin UAV, which on its own, without autonomy, is a fairly undifferentiated platform. You probably can't imagine it growing at an unnatural rate or commanding an unnaturally high price. But a startup with the truly differentiating software acquires that, and it can affect trajectory on both those principal components, and it both unlocks higher growth and better margins and a richer valuation multiple, and then the returns start to get pretty interesting.
So last question for me before we turn over to Q&A is, what advice do you have for founders in the room looking to build at the intersection of technology and government?
Yeah, I think I'd come back to some of the points my colleagues made here. First off, if you want to build a great company in this space, you have to understand the problem that you're trying to solve. I think Dan used the phrase empathy for the problem. So you have to eat, and Paul maybe talked about passion for it and the journey to get there. So I think you have to really understand the problem that you're trying to solve. The next thing you have to do is you have to build a team of complementary skill sets. Then you have to figure out a funding structure to your company that matches the ways in which the customer is going to evaluate you, deem that you've made progress, and give you the next milestone of customer support that will allow you to raise money at a higher valuation. So I think there's a lot of things. I also think while we're talking about defense, a lot about defense tech here, I still think there's a lot of opportunity for dual use technologies. And the majority of investments we at In-Q-Tel are making are still what we characterize as dual use technologies. So I think in some ways you can oftentimes get some more interesting revenue early on in the commercial sector while you build a bigger, more complex product for the government use case.
I think the aperture of what to build here is huge. I think we keep talking about that. I mean, you could go from doing cyber to information warfare to all the systems we were just talking about, down to like making wire harnesses. So in order to put a satellite in space or to build a fighter jet, you need these wire harnesses which connect chips to sensors. And if the wire harness is made too short, you're 6 months behind. And so we invest in a company that's making wire harnesses. Really critical, really cool, not the first thing you think about. So it's really, what is it you're interested and passionate about, and going very, very deep in that journey. And then in that journey, you will find and understand where can you transform and modernize that thing. And then you have to go figure out the sales part, the domain part if you didn't serve, you don't have top secret access. But there's ways to get around that. But you will find that there are these really interesting problems that if they could just be fixed and transformed, can make a meaningful difference in the resilience of kind of the U.S. and its allies.
Not to get too meta about this, but I kind of feel like, if you're going to do it, I think you already know, right? And here's what I mean, right? I think that when it comes to something like defense and defense tech, it is such a mission-driven decision that I don't think anyone can talk you into it if you're not interested in it. And I don't think anyone can talk you out of it if you decided that's kind of like your life passion. And I think it's very hard for anyone to come with an objective test around that. But I think if you really think about it, you kind of know, right? People who join the military, for example, they probably don't do it for the pay and so forth, right? I think they just kind of knew. I think it's one of these things where you ask the 20 whys or whatever, and then you get to that point of like, I don't know, I just feel that way, And so I think defense tech is one of those things. I would say it has all the hallmarks of startup risk and reward, right? And so, like not knowing whether you will personally have a successful outcome or whether this whole, wave of technology is going to have a successful outcome or not, you kind of have to pick based on your own personal conviction, right? If you do this for the next decade, which by the way flies by like really quickly, right? Like, are you going to look back and say, hey, I'm really glad that's how I spent a decade of my most productive years, right? Regardless of outcome. And I think to get to that level of conviction, you kind of already know or you don't.
Mm-hmm. On that note, questions for our panelists. Question is, for a lot of these defense tech companies, it feels like it's either IPO or bust, especially since there's a more limited M&A market. Agree, disagree, thoughts on that?
Go ahead. I was going to say, different investors can look at it different ways, but implicit in what I said about like we only invest in companies that we think can truly shift the global superpower balance, implicit in that is our belief that there's not as robust an M&A outcome for defense tech companies at the moment. That could always change, right? Tech companies could start acquiring defense tech companies, a lot could change. But today when I look at the outcomes, it kind of feels like you got to blaze a path to go on public. Otherwise, you're going to be, a less interesting tuck-in acquisition. And as a result of that, that's why we rely so much on that success case when we think about a deal.
I think we have obviously a contrarian point of view, right? We think that the easy industries are easy and they're actually not going to be ripe for value creation, meaning enterprise software and B2C. We think the hard stuff is where it's going to make a difference, and obviously we think defense, industrial, energy is where you're going to have these kinds of outcomes, provided people pay a premium for software-defined hardware. That is a critical point in the thesis, that you can get a 10x revenue multiple on a hardware company, not just a software company. And then you look at the markets, right? Global defense market is, like $1.2 trillion. Global industrial market is 30% of GDP. Energy transition is obviously huge. These are like the last remaining $1 trillion markets that haven't been touched by technology. And so, yeah, it's gonna be super hard, super ugly along the way. But if you think about the dollar opportunities to convert them into market value, it's certainly there. And I go back to the Palantir point, SpaceX. When Anduril goes, it's going to be obviously a huge outcome for that and pull a bunch of momentum. And this whole industrial base, which hasn't really been tapped, not to digress, but like people don't realize like some of the greatest performing companies in the last 10 years are industrial manufacturing roll-ups. Heiko, Danaher, TransDigm, Laura Group. These are like some of the highest performing companies in stock market performance. And what do? They make bits and parts for the industrial base.
So your question is a really interesting one, and it's being bandied about right now in the industry, because if you're familiar with the double hump hype cycle curve that people talk about, we're clearly on the backside of the first hump where we're entering the trough of disillusionment, and people are wondering like, all right, there's been all this hype about defense tech, what has it really done? But I go back to 2000. I have a long answer to this question, by the way. So
going back time machine.
Yeah, we'll go back to 2006 when there were two companies that were starting to get noticed by venture capitalists and they were SpaceX and Palantir. And they looked very different than the traditional venture-backed startup company. But people were kind of intrigued by the team, the technology, in the market they were opportunity. As an investor in Palantir back then, I got a lot of calls from top-tier venture firms, like tell me, about Palantir. I like everything about it except the market because I don't understand the market. And I'm really nervous about the market. And I tried my best to explain it to them. The Palantir team tried their best to explain it to them. But time and time again, the top-tier venture firms ultimately passed on investing in Palantir because they just didn't understand that market. And Palantir had to really raise most of its money from non-traditional early-stage investors. SpaceX had its own path because Elon was sort of funding a lot of it himself. But similarly, a lot of venture funds kept looking at SpaceX and being like, wow, I don't know how to think about that. 10 years later, in 2015, 2016, all of a sudden the venture capital looked around and said, wow, those companies are worth tens of billions of dollars, and they can return a fund for a venture capitalist. And we all know venture capital is a hits-driven, power law-driven industry where 10% of the deals will generate 75% of the returns. And so the venture capitalists were all kicking themselves like, I just missed on the exact type of deal that we're trying to invest in. So that's when defense tech started to become more interesting. And that next wave, because the venture capitalists were like, oh, how do I invest in the next Palantir or SpaceX? And that was that next wave that I talked about with Anduril and Shield AI and Skydio and Vannevar Labs, and all of them were sort of started in that sort of 2016, 2018, 2019 timeframe. But if you notice, all those companies have great top-tier traditional investors in them. Those companies are now 5, 6, 7 years old, right? And they've raised a substantial amount of money, and none of them have gotten to that public outcome yet. None of them have achieved a liquidity for their investors yet. And so now everyone's sort of wondering, geez, I'm kind of, pick your metaphor, all in a a poker sense, a pregnant in another sense. Like I'm really out there on the limb of like I got a bunch of money into this sector and we haven't achieved any liquidity yet. And did I just make a big mistake and did I just cost my fund a ton of money? I think Anduril is absolutely going to get out. I think Vannevar Labs is absolutely going to get out. I think Shield AI and Skydio are going to be valuable companies. I think they will all eventually get there, but we're in that time, and this happens in every industry, where this is when people start to get nervous because they're really exposed to where if this doesn't work, they're kind of getting fired from their firm. They're not being able to raise their next fund for their firm from LP's perspective. So there's some nervousness there. I think the really interesting question related to what you asked, I told you I had a long answer here, is if the traditional venture business is a hit-driven business where 10% of the deals generate 75% of those, is defense tech even more concentrated? Are there going to be fewer winners, thus more concentrated in a smaller number of firms? And what's the consequence of that going to be for the industry? I think that's a really interesting, how many companies are really going to get to that Palantir, SpaceX, Anduril stage of exit velocity? I think that's really interesting. A side note to your question, though, is that the one place that M&A is still happening is cyber. So if you characterize that as defense tech, there's a lot of M&A still happening there.
Mm-hmm. One more question, yes. Yeah, to repeat the question, it's more just around stigma around defense tech nowadays. What are views now? What are you seeing? How has that changed from a few years ago?
So I got a passionate answer about this question also. So, like I said, I've been in this business for 18 years. I think a lot of that hype around Silicon Valley doesn't support defense tech technologies. They don't want to be working on stuff that might be used to kill people, target people, support warfare, all that sort of stuff. I think that was way overhyped. We meet with 1,000 companies a year, have been for the last 18 years. Most of whom, to my earlier point, are dual-use technology. So they're not companies that were started to go in this space. And we come in associated with the Central Intelligence Agency, right, which is not everyone's favorite agency in the world. And the number of companies we meet with each year that sort of say, I'm a little uncomfortable with what you guys do and what your customers do is 5 or less, right? So I think that belief was really concentrated in a small number of insanely profitable consumer-facing tech companies who had a luxury that most companies don't have of choosing who their customers are or what business they're in because they were making so much money. And I think the whole Google Maven kerfuffle, which was probably the most visible example of that, was really poorly handled by all parties involved. And I think if it had been handled better, it wouldn't have been such a big deal. I do think, as much as I love Palantir, I think Palantir also overplayed that thing because it was a great message for them to deliver to their customers of like, look, the rest of Silicon Valley hates you guys. We're the only company that wants to do business with you. Give us all your business, right? It was in Palmer and Trey down at Anduril sort of picked up on that thing, and so it's self-serving for all of them. And again, I love those guys as well. But the vast majority of Silicon Valley wants to help, I think, because they're patriotic. They want to help these companies in their mission of keeping our country safe, or these agencies in keeping our country safe. 2, they're capitalistic. They want to make money, and they see this as a profitable market to serve. And 3, they're engineers, and engineers get geeked out by working on the hardest problems. And some of these problems that they're trying to solve here for this community are really hard problems that they get excited about working with. So I think that concern has always been a little bit overblown.
Paul, Dan, any other thoughts on that?
I think it's changed dramatically. In Europe, Helsing couldn't raise a round, their first round of financing 4 years ago, and literally couldn't get any money for the business. And now they're the darling of the European VC marketplace. But like all things, these things go back and forth. And so what we're concerned about is that when it swings back. So now it's all hyped up and it's all exciting, but like if there aren't the outcomes in the next 2 years or whatever, like geopolitics takes a different turn and we pull back from the need to invest in these critical industries, energy, defense, industrials, then we've lost this special moment. So I'm actually worried about the opposite effect, not the FOMO, because we have enough energy and momentum to do things. We just need to capitalize on it now.
Yeah, I trace it back to kind of a more, call it personal decision that lives within each individual, right? I think we we live in a country that has a volunteer military force, right? Anybody can choose to join the military or choose to not join the military. Similarly, everyone in this room has tremendous opportunities, right? Like, you can think about defense tech, and if you're fired up about it, and mission of the national security of the United States and its allies is something that calls out to you, I think right? I think you probably think, why would I go do something else? Why would I go sell software? That sounds way less interesting, right? On the other hand, if you're in the camp where you're kind of uncomfortable with that, or you kind of feel like I don't really get it, or what have you, everyone in this room is in a tremendously privileged place where they have many other opportunities that they can go and pursue, right? And so, I just feel like that's one thing where it does come down to the conviction of the individual. I think this is a polarizing enough thing that the industry both benefits and suffers from that polarization. On the one hand, there isn't this kind of mass market broad appeal. On the other hand, I think in tremendously mission-driven places, these organizations can recruit people who, and punch way above their weight class, and compared to other places that pay similarly, right? Let me put it that way, because I think people who are passionate about this mission will pursue this mission, and economics take a secondary, kind of level of importance. And so, all to say, I think it's about the conviction of the individual. I think this is the kind of thing that people do have very, kind of active thoughts on. I don't think anybody kind of stumbles into it, just finds themselves, I just showed up, made some random decisions, and ended up, working at a defense tech company. I think it's a very conviction-driven decision.
Mm-hmm. On that note, we are out of time, but we'll be around to answer additional questions. Thank you, Dan, Paul, and Steve, for joining us today.